For Thursday the 10th of November. Feels like we never left. I must say the guys in month 2 looking much more fresh-faced than possibly the guys in month 3. I'm not sure whether that's the stress of trading live or the alcohol consumption that was going on post the night. But looking at the markets then this morning, I managed to stick it out till about midday or so yesterday, and at that point, when I left, if we just look at the S&P chart, we were starting to edge lower again. That was about when I left the office yesterday, and I was thinking at that point, this was kind of very similar to kind of pound post-Brexit activity, the big move that happened overnight, the kind of recovery as some take profit on those shorts from an overextended move. And then I thought, well, at some point this has got to start feeding through in terms of the uncertainty overall over whether it's fiscal, monetary policy, foreign policy. But I checked my phone after I'd had a few hours sleep, and I saw that for one, the Dow closed at a record all-time high, and the S&P, if we start measuring this up from a percentage point of view, obviously the full overnight triggered the exchange halted trade at 5% limit down, but from that point of 5%, which was when it was kind of bedded in that was the result kind of done by that point, to where we are at the moment, we've rallied about 7.5%. Pretty incredible move. So 5% down, countered then by a 7.5% rally, and this morning, who's to say we don't add more to that? Don't forget, I've not even looked, but the all-time high is actually not too far for the SPOOs either. We're trading 77 3/4. The all-time high, obviously we never breached 2200, but we're within sight of that, and definitely I would say a test of that even in today's session I don't think can be ruled out. I did actually see a statistic, if you just bear with me one sec, last night about the weekly performance in terms of the S&P. This, if we continue to move higher, would be the best week of the year. So, go figure. If you're talking about economics or expectations in the market of how things should work in periods of uncertainty, you would think, well, that's the opposite of what we should see. The best week of the year we're on course for in terms of the S&P. Let me just show you the Dow chart, because it was the Dow that printed at record highs. What you can see here then is these are multiples of years. You're looking at the axis at the bottom, obviously the financial crisis defining the left side of the chart, the continued rally through the various guises of QE and low interest rates, and then here we are right at the very precipice of the mountain that is the US equity market, and we've just popped above that high that was seen in summer to fresh record highs in the Dow. So valuations there have never been higher. Likewise, looking at the DAX, for you guys who are relatively new to the market, I can assure you this is not regular price movement that we normally see. The kind of gap up that we had, that was when we came into a fresh week, when the FBI dropped and cleared that latest investigation into Clinton, kind of holding pattern, if you like, in toward the election. If anything, we even rallied on the back of the fact that Clinton started to pull away as we got closer towards vote day. Then obviously the reopening of Eurex trade, we gapped significantly lower, but psychologically what was important when the futures opened yesterday was we did not breach that key 10,000 level. We were just a touch above it. We opened at 10,025, and then we kind of rallied thereafter. A little hiatus as before the US came in, and then they lifted again through the open on Wall Street, and European indices followed suit with the rally seen in the US. So let's just have a quick talk then about what's happened, a bit of a summary, we'll break it down into some different sectors, a couple of ideas going forward, and then it kind of makes a bit more sense, I think, as to why the market's rallied like it has. One of the main things I think that a lot of certainly when I watched it, I was very surprised, and I think the whole investment community felt the same. And when Vas came back in, I was talking to him about it as well, was the speech that Donald Trump gave. So the president-elect speech, the first time he spoke after the results were formalized, I was incredibly surprised, actually. What you saw in the acceptance speech was a shift from the candidate Trump to President Trump in some respects, in that you saw deliberate, calm, conciliatory, and predictable kind of comments. This was definitely not the Donald Trump that we'd been seeing on the campaign trail for many months in the build-up to this event. This was a completely different kind of more tactile approach, more emotionally sensitive, talking about America as a whole and the people coming together. This was totally not the line that was spun in the campaign trail, and I think a lot of that actually acted as a bit of a catalyst for just alleviating the kind of concerns that many people had that were looking for a kind of a renewed second sell-off in the second half of the game. Will in the chat saying that won't last, old Trump back this time next week. That's of course coming from a guy I'm sure is long gold at the moment. So he might be right, but maybe we were all fools and this was the exact game that Trump was playing in order to get in, and actually now that he's in, whether or not we see him follow through on a lot of his approach on his mandate will yet to be seen, but we're going to talk about that a bit more here. So let's just quickly have a look at the actual final result, because I think when I gave the summary yesterday morning, we weren't actually quite at the point of all of the numbers being in, but this is kind of how the votes split then. Clinton 228. Don't forget that Nate Silver, the guy who projected with incredible accuracy the last two elections, his model had it up at 302.3, I believe, for Clinton votes was the projection. Way lower, 228. Trump 290. So pretty comfortable in the end. And when I start skimming through here, this is alphabetically each individual state. Florida was really the key because you will remember timing wise it was one of the first to close, and therefore as that 1%, 2%, 5% and so on started the votes being counted, we saw those massive swings in volatility very early on between big jumps of Clinton, Trump, back and forth, and at that point we were still pretty optimistic of the outcome. But Florida actually was extremely close in that respect, and in the end Trump did pull away and secured the state, which was obviously a key because of the size, 29 votes. But what's more interesting here was that there were several other obviously key swing states, and Trump just dominated those swing states. If you think about the bigger ones, Georgia 16, and it's not just that he won Georgia or North Carolina and Ohio. The margin was incredible. I mean, Georgia we knew would go Republican, but 51.3 to 45.6. North Carolina we thought would be very close. That was 50.5 to Trump to 46.7. And then Ohio, which is that kind of bellwether, 52.1 to 43.5. That was incredible margins in terms of these overall outcomes in these key areas. A quick look at the voters who gave Trump the White House, and well, really to me, and I'm sure it will be to you, this is of absolute no surprise when you start breaking it down demographically. But I think it's worth just a quick look at as an overall summary. So white voters chose Trump over Clinton. I was watching this on the news when I got home. It was something like, in terms of proportionate for the black vote, was 88% for Clinton. Actually, I think it was something like 36% of Hispanics voted for Trump, which I thought was incredibly high. I'm not sure the reasoning behind that kind of sentiment, but certainly Clinton really did fail on that side to grab hold of that particular demographic itself. Trump ran up huge margins in middle class areas. I don't think that's too much of a surprise. Trump counties have more voters who are US born, and so again just highlighting the kind of white American, rural America voting very much in favor of Trump. Trump's best counties tended to be the least educated. Again, I think this is kind of a reflection very much as well of a similar type of situation and sentiment of what we saw with Brexit when we had the summer vote in the EU referendum, and Trump ran away with the American vote, a census to describe their heritage. About 1 in 3 Americans said German, Irish or English, but the biggest resonance was with those 22 million that described their ancestry as American. And so he really got hold of that middle class kind of and tapped into that popular vote that really played out. Overnight we have had a couple of comments though of note. We've had the rating agency S&P, obviously a couple of people were looking out for their initial snap interpretation of how do they think that this will fare out in terms of the sovereignty of the country, which is obviously critical in terms of the servicing of the country's debt. So in summary, S&P have said that they've affirmed the US. Again, don't forget S&P is the biggest of the rating agencies, but has them ranked one notch below AAA. That's been that way for a long time. They are currently ranked AA plus with a stable outlook. They said it was a stunning upset. We assume the long-standing institutional strengths and robust checks and balances of the US will support policy execution in a Trump administration, despite the president-elect's lack of experience in public office, which does raise some uncertainty about policy proposals. They did say, though, that they added the US's high general government debt and increased uncertainty over its trajectory strain the ratings of the world's largest economy. Now, this latter part, as we're going to talk about shortly, could well become very important because of the fiscal side of the spending that Trump wants to do in order to boost the economic performance of the US. And certainly if they start racking up further government debt, then this could start to become more of a bigger issue from a sovereignty point of view. Now, okay, so looking a bit more on why stocks rallied like they did, I think it's quite interesting to look at the corporate winners and losers. Now, the FT have done an excellent article this morning, of which I've sent out to you guys, so please do have a read. So looking at this on a sector breakdown, it's the pharmaceuticals which are actually probably the biggest winners. And if you're looking at the Dow trading at record highs, Pfizer's shares, one of the biggest pharmaceutical companies in the world, multi-billion dollar company and one of the larger companies in the Dow index, rose 10% yesterday. That's a phenomenal move for a company of that size. A lot of this is to do with the fact that investors predicted his administration would take a more lenient approach to drug pricing than a Democratic White House, because Clinton, this was one of her kind of key drivers of policy, was she wanted to clamp down on this mispricing of various drugs. The leniency more so seen with not Trump's actual view, but just not Clinton getting into power, meant that healthcare stocks took a phenomenal lift yesterday, and that did help incredibly with this resurgence that we saw in the second half of the kind of daily session or the US session. Other areas, oil and gas firms also rallied. Gas, well, in terms of the sector, Trump is very pro the kind of energy independence view. He has said that the administration under him would include US exploration and production groups that may want to drill on federal land, and he's pledged to make available that for oil and gas production. So a lot more favourable for that sector as well. And if you remember, when we're monitoring things like cross correlations of markets, and we're looking at oil performance to then drag on to the S&P, obviously it works exactly the same when there's strong sector specific news, and this is overriding. We had the pharma sector and oil and gas that were up significantly yesterday, so that certainly helped lift those US markets. On the flip side though, there is obviously losers, and car makers are one of them. They face significant uncertainty as the election of Trump raises new questions over the health of the US automobile market, as well as consequences for companies that manufacture in Mexico. And so car makers were a big loser, as too were renewables. This comes that given the fact that anti-renewables rhetoric from the president-elect, combined with his hostility to the Paris Accord to tackle climate change, as far as Trump's concerned, climate change is lower down the priority list, and so the renewables sector got hit hard yesterday. Going on, infrastructure, obviously a big winner, because he's been talking about fixing inner cities, rebuilding highways, bridges, tunnels, airports. This was all part of the president-elect's acceptance speech. This meant that all types of firms related to construction and infrastructure building took also a significant lift to the upside. Increased government spending is going to be a big component of helping boost the US economy going forward. One of the other key areas as well that took another lift was Trump's presidency should be a boon for the defense sector, boosting military spending, new fleet of warships, squadrons of fighter aircraft. Again, it starts to make a bit more sense then, technically, why these equity markets would move higher. Again, this is a fundamental kind of move into the expectation of value of potential further profitability coming forward for these companies, rather than the overall kind of fear that might have encapsulated from a more broader macro perspective. One of the other big things, obviously, that everyone's talking about is Janet Yellen. How does the future fare for Janet? And the election of Donald Trump will unleash a policy shift away from monetary policy towards fiscal measures in the coming months. That's what some of Trump's advisors have told the Financial Times. Now that's actually very interesting, because if you listen to a lot of economists over the last year or so, as we've gone through the period of ZERP, if you like, and then into negative interest rates, restarting of QE, tweaking of that program, and in some respects that program itself being exhausted in the case of the ECB, then it's kind of, where do you go? Has monetary policy hit its endpoint in terms of what it can do? And so a lot of people have been saying that the government needs to get more involved from the fiscal element in combination with monetary in order to help keep the economy growing. Certainly that's been a big push of Japan's, the way they've been trying to target policy, both from a government and a central bank point of view. And so actually it could be quite positive in that regard if managed correctly, if the US start to step up on their fiscal measures in the coming months. But obviously, Janet Yellen, Trump, the campaign rhetoric has fueled concerns about the future of Janet, who faced unprecedented levels of criticism by the candidate during the campaign. One of the things, though, that I did read in this article was that Mrs. Yellen, her term is not due to expire by 2018. But the election of a man who has been so critical of her during her campaign has triggered speculation about her future. Now, in theory, I don't think that even through having complete control or clean sweep of Republican in Washington, they still can't push her out, but certainly they could pressure her and she can resign. Otherwise, her term finishes in 2018. So there won't be any immediate chopping of Yellen. It's not like Trump's in, she gets fired, therefore December meetings on, new person in place. That is not how it's going to work. Most likelihood is that for the time being, I would imagine, until the market settles, as to does we get used to what are the policy pledges that Trump is going to do. Obviously, there's a lot of uncertainty. There's something like 11 million migrants in the US, of which said to be illegal and which Trump said he'll remove. He's also this morning said and followed through on his pledge that he is going to build a wall and the Mexicans are going to pay for it. He's also talked about the 45% tariff on Chinese imports. He's also talked about not helping the smaller country as part of NATO. So there's certainly still a lot of negatives out there potentially to rock the boat. And I think that all the more reason then that you definitely need Janet Yellen to steer the ship of the Federal Reserve through these troubled waters that ultimately are going to be very rough going for at least the coming months. And this is not to also forget the fact that we've got the Italian referendum, we've got the triggering of Article 50, we've also, I believe, got French-German elections coming up in 2017 as well. So there's a hell of a lot of risk out there from a macro perspective, and what you really need in those times is continuity from a policy approach. So although Yellen might go in the long term, I think that she'll be here to stay. And actually, although after the initial overnight session, a debt hike was priced off the table, it's actually been brought back into focus for December. Let's just quickly bring it up and have a look at the December odds. We're still tracking back up at 70% after the phenomenal bounce we had in the markets and the shift in expectation. So certainly a rate hike which might have been brushed aside at this point is still the consensus for the markets. And obviously just looking at treasuries here, with the stock performance and the severe upside rally we had in the US session, that obviously saw that move that we actually had during the overnight session, and that flight to quality bid was completely reversed, and the move was double to the downside. Probably a combination of the Fed rate hike getting repriced back in with the resurgent equity market just weighing on those prices. So certainly a lot to think about for the forthcoming future. This was what I was talking about in terms of China, specifically Trump to brand China a currency manipulator, and this has been ratified by someone in Trump's camp this morning. That's exactly what he's calling them. And this is a table that you might have seen me post last night on Twitter and on the Facebook group. This is total trade by order that the US has with other trading partners. And you can see who sits right at the top of the pile by a fairly sizable margin is China. The relationship with the Far East is going to be critical moving forward, because this is a country that is growing in might and is going to be more influential as the time goes on in regards to global trade and demand for goods that come out of specifically the US as well. And so relationships on that regard are very important. You'll remember over the last year or two, Obama and UK politicians, as well as in Europe, making concerted efforts to be building relationships with that part of the world, China and India in particular, given the political and economic powers that there will be in the future. And what's interesting here is obviously Trump defining China as a currency manipulator. I think he called them in the election campaign the Grand Master of manipulation. That's not going to go down particularly well when he starts talking to them. So it'll be interesting to see whether he can maintain that kind of aggressive line. Elsewhere, Canada obviously needs to be talked about, and then Mexico, of course, will be feeling the kind of the sharper edge of the sword in terms of their immediate economic impact. But obviously, at the current state of play, we've had a fairly contained reaction. Now, that's not to say that this is the ultimate outcome of this event. We could still see renewed volatility. What's going to be interesting today is that after yesterday's really big move in equities, as I said, the Dow is already at record highs. The S&P is not far from there. 9150 is what you've got to watch on the upside. Now, what's going to be interesting is when we get to that level, which I'm sure at some point, whether today or this week that we will, what happens then? Do we hit that level, blast through 2200 and then continue moving higher? And at what point then do people, if any, start to question the kind of more authority of the actual execution and implementation of the pledges of which Trump's administration is based upon? So quite a lot to look at, I'm sure, as we go through the weeks. I'll be updating through the chat with any bank research that I get as and when I have it. A quick look then to round up with the session for today. I think one important thing here is that you can see on the calendar there's not a hell of a lot going on. And I think that definitely for this week in particular, it's going to be the fallout from the election, which will be the main driver of global financial markets. And so I wouldn't be looking to data points like jobless claims to have any type of concerted impact on the market. It just won't. We do have a couple of speakers. Fed's Bullard is speaking at 2:15. As I've said a couple of times before, he tends to be probably the most opinionated and forthcoming in pushing his views. So that could be interesting in the wake of just what's happened politically. That'll be at 2:15, so just before the open on Wall Street. You've also got ECB's second in command, Victor Constancio, speaking at 10:03 in the afternoon. So you've kind of got, you've got Haldane as well. So you've got three voting members, let's say, of their own respective central banks of the main Western world. So be interesting to see what they have to say, because I'm sure if there's any type of Q&A session, they will of course be asked about their thoughts on Trump and the Trump jump that we've seen in the equity markets in the last 24 hours. Okay guys, going to leave it at that. As I say, I'll be in the chat throughout the day, and any new research that I get of kind of institutional thinking of where we go from here, I'll of course be providing that to you throughout the day. So nice to have you back. A bit light on numbers in the month threes, but I'm sure they'll start fading in as we go through the day. So have a good session.